newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie, standing in for Francine Lacqua. Now, the UK has become the first country to strike a trade deal, of course, with the US after President Trump's tariff onslaught. Trump has pitched his trade framework with the UK as an historic achievement after speaking with UK Prime Minister Keir Starmer by phone yesterday. But the agreement fell short of a full and comprehensive deal.
This is a maxed out deal that we're going to make bigger. And we make it bigger through growth. I think it's going to be something very special for UK and special for the United States.
UK Prime Minister Keir Starmer conceded the pair did need to, quote, finish ironing out some of the details.
We've agreed the basis of a historic economic prosperity deal. And that is a deal that will protect British businesses and save thousands of jobs in Britain. Really important, skilled, well-paid jobs.
OK, let's bring in Bloomberg's EMEA News Director, Ros Madsen. And Ros, you and the team, I know, are quickly focusing on the trade conversations in Switzerland this weekend. And I know that's arguably where the market's eye is now. To what extent, though, is the UK-US agreement a framework, if not for China, then maybe from other countries waiting in the wings, whether it's Japan, India, South Korea, maybe the EU as well? Is this a template that others can follow?
Well, certainly you look at this and you think, how did they get this done and what did they arrange to get it done? You know, what did the UK give to allow the US to claim a win? I mean, they didn't give a lot on the surface of it, but they allowed Donald Trump to say, I've got these things and then therefore I have a win. And that's really setting the parameters for a much more complicated conversation down the road, because none of this really got into the tricky stuff. And that's part of perhaps the art of getting that initial deal for Donald Trump, is to punt the difficult stuff down the road. But is it really a template for other countries? I mean, China and the EU are much bigger fish to fry, arguably, for the US when it comes to trade. The UK has a trade surplus with the US, in a way far less complicated, what I would say, than the EU and China. And China and the EU actually have, they're bigger economies. They've got more heft. So a more complicated conversation. The EU, obviously, also a bunch of countries and not just one. So can you take it as a template for really big economies like that, or perhaps for some relatively smaller economies around the world might see that this is a template they can use? But also countries like Japan and India, you know, they've got very strong domestic imperatives to think about. You've got to be really careful, even in this initial gambit, you don't give too much away. You've got domestic industry to think about. You maybe got agriculture to think about. You've got autos to think about. In India, you've got market access issues, which are very complicated. So even in that early stage, you've got to keep it broad, because otherwise you're going to pin yourself in down the line in ways that you don't foresee and you certainly don't want.
So lessons that can be learned, but not a direct mirroring for other nations as they look to build out their own trade agreements with the Trump administration. On the US-China talks this weekend in Switzerland, what should the expectations of markets be around what could come out of those conversations?
Well, they're setting expectations simply to be, this is a feeling out exercise, a chance for us to get together in the room, have a conversation, get a sense of each other, build a relationship, because these are officials who don't have a direct relationship so far. And part of it is sitting together, looking at the body language, working out how to converse with each other, and putting out some lines, some red lines initially in that conversation. So this will be a scene-setting conversation. It's really important they've actually managed to agree to meet in person, because if this meeting goes well, does it pave the way for a phone call, for example, between Donald Trump and Xi Jinping? And that's the big thing everyone is looking for. They're not going to come out of this with a trade deal. They're going to come out and say, we've made all these understandings around it. The US is making clear it doesn't want to lift tariffs on China. China equally not wanting to move before this conversation. But it is an important step potentially along that road to getting the presidents talking. And from there, do you get towards a better understanding? OK, just the fact that they are sitting down for talks is in itself an achievement at this stage. There's a low bar, isn't there? But we'll watch to see what details come out. And, of course, could be impactful for these markets as well, particularly if they do move tariffs lower on the back of those talks in Switzerland. Bloomberg's Ros Madsen with the context around what is happening with the US, UK and, of course, those talks in Switzerland. Thank you. Now, IAG has
confirmed, and this links to the UK-US deal, of course, a major order for wide-body jets, including 32 Boeing 787s for British Airways in a deal tied to that trade agreement between Washington and London. The group has also ordered 21 A330neo planes for Airbus as part of a $100 billion investment in its fleet. The company reported first quarter earnings that beat analyst estimates and has maintained its outlook, saying demand is still strong. Let's take a look at how the markets then are pricing in that US-UK deal and how it could move the dial in terms of the economy of the UK. Very pleased to say we can bring in Jari Stehn now, Chief European Economist at Goldman Sachs. Jari, great to have you in the studio, as always, joining us this Friday morning. Does it change the outlook for you and the Goldman team around your view, your forecast for the UK economy on the back of this agreement?
I think it's helpful, the auto carve-out in particular. It also sets a better mood music. But ultimately, we have only upgraded our forecast very slightly on the back of this by 0.1 of a percentage point and still see a significant drag from the 10% baseline tariff that, of course, is staying in place. And quite importantly, also from the weakening in growth prospects elsewhere in the world, where, of course, the trade policy outlook remains much more uncertain. So I would say, bottom line, yes, it's helpful, but we continue to be cautious on the growth outlook for the UK.
If we get a flurry of deals of this nature, framework deals, between now and the end of that 90-day period, if we get some progress in terms of a reduction of tariffs when it comes to the US and China, these are all caveats, of course, but there does seem to be momentum in terms of some, at least surface-level deals being made within that period. The UK is clearly an open economy. Does that change the dynamics? To what extent would you have to take a step back and think, OK, we're going to reassess our forecasts in a scenario like that?
Yeah, I mean, it would help, but it's also what we've baked into our forecast.
Right,
so
OK.
So we are assuming essentially that the 10% minimum baseline tariff stays on all countries. The sector-specific tariffs, largely speaking, stay on all countries, and that there's some reduction between US and China tariff rates. That's in our forecast. That already implies, I think, a pretty cautious outlook for global growth and for the UK. But, of course, the risk is that we don't get quite as much in all of these country-specific trade agreements. So we would still approach all of this from a more cautious side. And I think consistent with that, we are seeing signs that the more forward-looking economic indicators, the surveys, are weakening. So the hard data is holding up, broadly speaking, in the UK, also around the world, but the forward-looking indicators are deteriorating, and I think we have to watch those pretty closely.
So top-line growth by the end of 2025, the forecast for the UK is currently what?
It's about 1% for this year and next. But, of course, that does come after a very strong first quarter print. So that's in those numbers, whereas the next few quarters are going to be slower than that, we think. So we have, on a quarter-by-quarter basis, around 0.2%, which is putting you a little below 1% in terms of the run rate. And that's below what the Bank of England is expecting and below what the OBR has penciled in. And
when you talk about caution, we got some sense of caution from the MPC, the BOE, yesterday, in terms of the decision-making and the three-way split. Markets are now fading expectations of a cut in June from the BOE. It's almost been completely cut out. How does it change your views on the terminal rate for the Bank of England, and in what time frame?
Yeah, the communication was hawkish, with the dissents, also the gradual and careful being retained, as you said. So we do think it has implications for the near term, and we dropped our forecast for a cut in June. We now think the signaling yesterday means that the hurdle for them to cut in June is higher than we thought before, so we made that change. But I'm not sure it matters that much for where we should expect rates to ultimately settle, because that will be driven by the economic outlook, by growth, by the outlook for wage growth, inflation. And here, as I said, we remain cautious. We think that there is a growth slowdown in the pipeline. We think there will be progress in terms of the pay settlements in the April data. And we also think inflation will cool more than what the bank is expecting. So we still think they will cut more than priced. We have them cutting to 2.75%. But we now think it will take a little longer. But they will switch, we think, to a faster pace in the second half of the year as that cooling in growth and inflation becomes more apparent.
OK, so 2.75% is the terminal rate that you're forecasting by March, and that's just right. Adjusted from February, but by March, 2.75%. And you talked about the inflation cooling in the UK. Megan Green of the MPC, of course, suggesting to us a few weeks ago that the trade war could be disinflationary for the UK. Is that an assessment that you would align with, and how, to what extent could it be disinflationary?
Yeah, I think that's right. We would share that assessment. First of all, we have seen a significant appreciation of the currency. We have seen a big drop in energy prices. We have not seen retaliation by the UK. That's important, of course, from an inflation perspective. And then lastly, we are also expecting quite a lot of trade to be rerouted globally, given the high tariff rates between the US and China. And a lot of that will probably end up in the UK and in Europe more broadly. We expect that to also push down on prices. So bottom line is the current run rate of inflation in the UK is still high, clearly compared to other countries, but we do think the outlook for inflation has softened. And so we think come the middle of 2026, the UK inflation picture will look more similar to other countries. It will not be that far away from 2%.
We have a new Chancellor now, fully confirmed, in Germany, Friedrich Merz. Potentially €1 trillion of spending on infrastructure and defence over a longer time horizon. But when does that start to hit the road, the rubber hitting the road, in terms of propelling a German economy that's faced 2 years of stagnation?
We think that the spending will ramp up gradually this year. We don't think you'll feel very much from that this year. I think this year will still be dominated by the trade headwinds and so on. But we do think from next year onwards, there's going to be a significant boost from that fiscal spending. So we did upgrade, after the German election, our forecast for 26, 27, 28 quite significantly, on average by 0.5 percentage point in each of those 3 years. So that's a big upgrade. I think the focus now really is on implementation. How quickly will this money be spent? What exactly will the money be spent on? And this is where we don't have a lot of details yet. We have the overall envelope, as you described, but not yet the allocation, and that's what we're now looking at.
Markets are expecting rates in Europe to be at about 1.5% by the end of this year on the baseline benchmark. Does that make sense in an environment where 2026 sees this fiscal impulse? Is the ECB going to have to respond in a different direction as that response comes through?
I think the 1.5% makes sense.
Yeah.
That's where we have the ECB cutting to in September. So 3 more cuts of 25 basis points. Of course, that improved growth outlook on the back of the fiscal stimulus is important and it does provide some resilience in the background. But I would say that's a reason for them not to cut further than 1.5%. Because when we look at the growth picture, when we look at the inflation picture in Europe, we do actually see quite a lot of cooling. So to give you a sense, we have core inflation in the euro area at 1.7% by the end of next year. For similar reasons to what I described with regard to the UK, energy prices, currency, China rerouting, also cooling in pay pressures. And so that is below 2%. There's some undershoot here in the baseline, which I think means that they continue to cut. But as you said, we have that fiscal coming in, we have that resilience, and I think that's a reason for them to stick to 25 basis point increments and a reason not for them to go much lower.
Okay, 1.5% for the ECB by September, 2.75% for the BOE by March. The forecasts on these central banks from Jari Stehn, Chief European Economist at Goldman Sachs. Jari, thank you as ever. Happy Friday. Coming up, is the EU prepared for the impact of US tariffs then? We're going to join Francine Lacqua, of course, at the Reykjavik Economic Conference for a conversation with the governor of the Bank of Lithuania. That is coming up. This is Bloomberg. Central bankers from the ECB and the Fed are in the Icelandic capital of Reykjavik to discuss the role of central banks in an uncertain economic outlook. Of course, that's as trade tensions threaten both the US and European economies. Bloomberg's Francine Lacqua is on the ground for us with a guest. Fran.
Yeah, thank you so much, Tom. I'm delighted to be here in Reykjavik, and I'm even more delighted to be joined by the Lithuanian Central Bank Governor, of course, Governor Šimkus. As always, Governor, thank you so much for joining us. Look, there's a lot going on, inflation, growth, a lot of concerns about tariffs. How would you describe the European economy right now?
Well, Thank you for having me here, first of all. And I think it depends whether you are optimist or pessimist. If you are optimist, you'll be looking backwards, to the indicators, let's say, of the first quarter of last year, or fourth quarter. They seem to be not that bad, right? The economic activity, it was reported positive numbers. Inflation is falling back, so basically we are almost as VCB, as monetary policy institution, basically at the target. But if you are more on the pessimist side, and if you're looking into the future, you cannot see that everything, or so many things which is happening, not only, in the last 100, a little bit more than 100 days, but from the start of the year. They are not good news for economic activity. Maybe it's good news for inflation, at least in Europe, maybe not that much in the US, but as for economic activity worldwide, Euro area, the US, this is not good news, and that's how I would describe. And the common factor, for all this is uncertainty.
Yeah, but also, there are concerns about inflation, right? It kind of ticked up, and the question is, do you believe it goes back down, or is it just going to tick up for the eurozone?
I think on this we need to be frank and humble. So there are many things that we don't know at the moment, right? So we don't know whether what and if and what could be the retaliation measures to the US tariffs. Retaliation by the European Commission. And this is an important factor, to consider when you think about the inflation in general. But I think to a large extent, if I take the information we have at the moment, so we have a clear disinflationary forces exerting downward on the inflation. So we have oil and gas fallen by 13% and 40% each. We have appreciated euro against the dollar, which lowers the import prices, but also negatively impacts the investment sentiment. We have a, so to say, possibility that China, it will very much depends how this trade tensions between China and US are going to be resolved. But there is a chance, there is a possibility that some of the China imports may be rerouted to euro area. And again, economic activity. I'm, the one which thinks that, in future, we might see deterioration of economic activity, and I would say the projection is going to be a little bit worse, maybe marginally, but still worse than we had in March. So all of this works as a disinflationary forces.
Yeah. What about stronger euro? So if the euro continues to strengthen, what impact does that have on both inflation and growth?
If euro strengthens, so first of all we have lower price of imports, right? So it's not only about the euro, but it's also very much about the retaliation measures, which I have already mentioned. And then strengthening euro, this might have on the possibilities of the exports from the euro area and also on the investment sentiments. So I would say for me, it's a disinflationary measure, not measure, but force.
Governor, given all of this, right, the market is expecting a cut in June from the ECB, and then maybe one or two moves after that. Is that the central scenario you're looking at? Do you think will happen?
I need to be, so to say, honest with you. We don't have a central scenario. There is no central scenario because there is no predetermined interest rate path. It's very good that we are agile and flexible because we take decision on the best data in each meeting. You know the story, right?
I know very well, but you also must have an idea of what you would do, right? Is June a done deal?
Okay, let me put it like this. What I described, the story, the way I see the economics, it's obvious that for me, June decision is quite clear. I think the cut the other cut in June is needed. I cannot, so to say, reject the chances that there might be another cut after the June, right? And again, because of the economic story I described, that was in July, as markets expect, or in September, in December. In the last 100 days happened so much. Why we are so in a rush to think what might be even after June? To wait up until June, we have another 30 days and so many things may happen. So I think it's very important here to have this flexibility and meeting by meeting data dependent approach.
But, Governor, there's clearly a rate-cutting cycle, right? Yeah. And for the moment, we're in it for the ECB. What would need to happen for you to think, actually, it's really now time to pause this?
Well, to pause it, as I said, I think what's going to happen in June, in my eyes, is pretty clear. But then it's not about, just making this deliberate decision to pause, but it's about we'll be at the level of a natural interest rate already, 2%. I mean, people may come up with different estimates of this, but I mean, we are more or less there. And this means that we can be, so to say, slower with our decisions, because we are, in a way, will be moving into a more really accommodative direction of the monetary policy stance. That will be accommodative or not, I mean, it's discussable, right? But we'll be moving into that already, into that direction. So I think we are not late. I mean, we are nowhere late. So I think we can take a time to breathe in here and to see how the things are evolving.
Governor, I mean, in June, we're also expecting projections for inflation for 2026 and then 2027. If they were to actually fall, below or undershooting the 2% target, how worried would you be about that?
Well, I wouldn't be worried in a sense that I'm the one who thinks that there are quite high chances we'll be undershooting, and I'm saying this already for some time. So first of all, the other thing is that we do need to be humble. I mean, 2026, 2027, I mean, it's 2 years to go. So, I mean,
a lot can happen.
A lot can happen, and we always been, a little bit, so to say, it's not about this precise target or number, but I think it's about directions and how the inflation changes from the target. If it is below 2%, let's say in 2026 or 2027, I think it will be below marginally. So, I mean, we need to be, so to say, prudent. This is not, so to say, the end of the world, right?
Governor Šimkus, thank you so much for joining us. Of course, we'll have plenty more throughout the day here in Iceland, Tom.
OK, Francine, Lacqua, on the ground for us in Reykjavik. Some great conversations coming through. Plenty more coming up, of course, throughout the next few hours, including conversation with the Fed's Adrian Kugler and John Williams. Catch those conversations this afternoon on Bloomberg. Stay with us. This is Bloomberg. Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Markets buoyed on hopes that tariffs between the US and China will be cut during trade talks in Switzerland this weekend. A diplomatic win for the UK as it strikes the first trade deal with the Trump administration, but 10% baseline tariffs remain. And Pope Leo XIV will preside over his first Mass after becoming the first American to be elected leader of the Catholic Church. We've had some movements as well in terms of a conversation between Friedrich Merz, of course, the Chancellor now of Germany, and President Donald Trump. Merz saying that he has told Trump that he favours a zero-tariff trade agreement. He's explained, apparently, to the US President that EU members cannot have one-to-one trade deals. You'll have to deal, of course, with the bloc. He has then again emphasised his preference for zero tariffs in terms of the trade agreement. We know that there has been little progress, in fact, between the EU and the Trump administration in terms of forging a deal. The Chancellor as well updating us in terms of his plans to visit Washington, D.C., saying that President Trump has invited him to visit the US Capitol, and we'll see when that happens. We know he was keen, of course, the new Chancellor, to be over in the US in the next few weeks. Also saying that on joint EU debt issuance, that should remain an exception and not a permanent feature. So continuing that line from Germany on the question of EU joint debt and pushing back against any assumptions that may be coming down the pipe. But we'll watch, of course, for that meeting between the Chancellor and his US counterpart. Let's get into the details of the US-UK trade framework, meanwhile, because that deal, of course, has been hammered out. Both countries claiming the deal is a win for jobs and industries. Joining me now is Shevaun Haviland, Director General of the British Chambers of Commerce. Shevaun, thank you so much for taking the time. If you then were to assign a grade, if you were marking the homework of this deal, what grade would you assign this UK-US agreement?
Well, it would certainly depend, I think, what business you were running at the time. I mean, in general, we absolutely welcome this trade agreement. Our members have said over the last few weeks that the government is doing the right thing, keeping a cool head. Retaliatory tariffs should be an absolutely last resort. So we should definitely congratulate the government on bringing down huge tariffs for the automotive sector. And remember, it's not just those who make the cars, it's a huge number of businesses in their supply chain. And of course, aluminium and steel tariffs are back to zero is great. I mean, I visited a business they have a place in Glasgow, in Birmingham. They make incredible aluminium and steel parts for F1 cars. In the US, they had millions of dollars worth of orders cancelled because of these tariffs. So it makes a real difference to our members. So that's very good news. But of course, that means at the same time, many other sectors are still paying 10% tariffs, the baseline tariffs. And so we really want to see UK government keep going with that negotiation and some easement there.
Yeah, does it feel like I hear you on those individual businesses, and clearly there's the relief. And I want to get your views on the auto sector. But we've gone from tariffs in the UK of 5.1% to 1.8%. And the US has gone from tariffs to 10%. Approximately, across a broad range of exports to the US economy from the UK. It feels like a one-sided deal.
I mean, our tariff situation is worse than it was in January. I mean, it is. But we are a lot better off than we were last week. So, that's the way trade goes. We have to find a balance. We have to negotiate. We have to find a compromise. We have to find a win-win. But as you say, we still have 10% tariffs across the board. And that's something, the UK government said this is just the start. We need a wider negotiation. Let's keep going.
So that 100,000 cap for UK cars, so they will be tariff-free into the US market. As you say, that's a clear benefit for the auto sector. Is that a stay of execution for a struggling UK auto sector or a catalyst for growth?
I don't think our auto sector is struggling. I mean, these are incredible high-end cars in general that go over from the UK to the US. And they're our second biggest export. So it's absolutely right that those jobs and those businesses were protected. About 100,000 quota is about what we currently export to that market. So that's good. So that doesn't leave a load of room for growth. But exports in general are a really important growth driver for UK PLC. I mean, we estimate that if we had 2 points, more trade across the world last year, that would have added about 0.6% to GDP. So exports everywhere across the world are really important, both to the US, to our EU partners. That's our biggest trading partner, of course. And we're encouraging our businesses to look around the world, look at the big growing markets of the Indo-Pacific. So we've got to keep remembering this is part of a bigger global deal.
What Shevaun, on that point then, the UK-India deal, I mean, it's going to take time to implement. 2026 seems to be the time frame. How are your members positioning to take advantage of that deal?
So we've just seen the deal this week, of course, that in the news cycle, it seems to have been almost immediately forgotten, but it is absolutely a huge across the board reduction in tariffs for UK exports into India. So we now have to help our businesses understand what that means for them, where they're currently putting their goods, what the opportunity is in India. But it's definitely opened up the market for lots of our sectors. So India, CPTPP markets across Indo-Pacific. We've got a big EU reset moment in a couple of weeks with EU leaders coming to London, and we're pushing the government to try and make trading arrangements better with the EU. So, lots more opportunity.
Are we seeing the dividends of Brexit now, Shevaun?
I'm not sure that I would relate that directly. I feel like a lot of things have changed since Brexit. I think we've probably moved on from that. I think what we need to do is need to deal with is a new world order, and that means ensuring that we have a win-win for UK PLC across the piece. This is not about a zero-sum game. This is about ensuring that we get the best deal for the UK.
And you talk about that EU-UK conversation on trade. You're in the room often with lawmakers and with those involved in these conversations. What is your sense as to how far this government is prepared to go on a trading relationship enhanced with the European Union?
I mean, we have been clear with this government and the last one since Brexit that the TCA is not working for our members. We thought they'd get used to it after a year or two. They haven't. It's still really hard. So we are absolutely clear that they need to be bold on the 19th. We need to see new arrangements around food and drink exports, around moving our business people around Europe, mutual qualifications, VAT arrangements. The list is clear. It can be done outside a renegotiation of the TCA. So let's be bold. Let's do some really good things with our EU partners in a couple of weeks' time.
OK, Shevaun Haviland, thank you so much. Director General of British Chambers of Commerce, of course, on the need for a bold approach to relationships on the trade basis, of course, with the EU, between the UK and Brussels. Now, to the banking space right now, because Commerzbank shares are higher this morning, helping to lift the DAX after reporting an unexpected first quarter profit beat. I spoke to the CEO, Bettina Orlopp, about the results earlier.
We forecast an elevated level of risk result for this year. The 850 is more than you would expect, but we also have a very well-diversified, well-managed loan portfolio, and that now pays off. What we see is an increase in defaults, and that is not a surprise because we now have an economy which is in the third year of no growth, and that leaves traces. And that's what we also see. But one has to say that the resilience of German corporates, specifically also of the Mittelstand, is very high. So what we see is really single cases across sectors, but everything seems to be well managed also from our corporate side, and therefore we confirm our guidance. Despite the tariffs, will clearly have an impact on German economies. This is also why we adjusted our GDP assumption from 0.2% growth, which is also very limited growth, to basically zero. And only next year we expect a positive stimulus by the financial package of the new German government.
What are you seeing on corporate restructurings then? You're saying some relative resilience. Are you seeing a pickup in corporate restructurings? And if we don't get a deal between Europe and the US, does that start to become a more prominent and salient issue?
If we can't settle a deal, it will definitely put more pressure on the corporates. In the moment, as I said, we have seen a constant increase of the default rates already over the past quarters. And it was also expected because we always said that this very low number, which we saw coming out of the pandemic, also because of all the government support measures, was not the normal number you would expect. And now it has entered the normalized levels, which we also knew before the pandemic. And that is something which will continue, and it will only change to a positive when we really see the financial package paying off, a positive sentiment, growth in Germany, and hopefully also a solution for Europe on the tariff situation.
The CEO of Commerzbank, Bettina Orlopp, speaking to me earlier after those results came through with a beat for that German lender. Staying on the banking space then, Monte Paschi and Mediobanca earnings also beat estimates this morning as the lenders reported amidst an M&A wave in Italy. Charlie Wells is here with an update. Charlie, what have we seen from these Italian lenders and how much of a focus have we had on the M&A space? What kind of update have we had in terms of the potential mergers from some of these lenders in Italy?
Yeah, Tom, so a really big morning for earnings for both German and Italian banks, really caught in that M&A wave emanating out of Germany. So you had that significant beat from Commerzbank. They were able to achieve the best first quarter in 14 years. Now, that was on the back of the fact that they did not have to set aside as much in loan loss provisions as expected. And this is really going to bolster this bank that has been the target of UniCredit. This kind of helps build some of the share price momentum that we've seen for Commerzbank. If we bring up this divergence that we're seeing between UniCredit and Commerzbank, this just makes that potential takeover all the more difficult for Andrea Orcel, their CEO. Now, we're talking a lot today about Italian banking M&A. That is the dominant theme, as a lot of these Italian banks, some of the key players in this M&A wave report. We got a beat from Mediobanca, a beat from Monte Paschi, and you can see that they are performing relatively well in the market. And it's a little bit difficult to keep a lot of these players straight, but if you have a timeline, you can kind of break down some of the key players here. You got UniCredit making that bid for BPM in November. You had Monte Paschi in January making that Mediobanca bid. And then more recently, you have Mediobanca in more of a defensive mood, trying to acquire Banca Generali, which will also be reporting later today. So we're watching for that. We're watching for signs of M&A activity in the comments from these executives, and why. This is such a big theme in Italy. You've got political players weighing in. One of the reasons is just scale. Banking, we know, is increasingly an industry of scale. And when you compare Italian lenders to a lot of their international competitors, you can see the size is smaller and you can see the motivation for all of this M&A.
Okay, excellent breakdown of a very complicated picture when it comes to M&A in the Italian banking space and the earnings lines as well. Bloomberg's Charlie Wells, thank you. Switching focus right now, because world leaders have been offering their congratulations to Pope Leo XIV, the new leader of the Catholic Church. Cardinal Robert Prevost is the first ever pontiff to come from the United States. For more, let's bring in Bloomberg's Flavia Rotondi, who is at the Vatican City for us. Flavia, give us a sense then of the mood ahead of the new Pope's first Mass.
Good morning. Well, definitely quieter today after all the expectations, the cheering crowd yesterday, the emotions are definitely quieter today, and also after the surprise, I would say, because of course, definitely Cardinal Prevost, well, the name has been starting circulating around lunchtime yesterday after the first rounds of voting, imagined to get a quorum, well, unsuccessful, and so the names of the two main contenders, let's say, Cardinal Tagle from the Philippines, Cardinal Parolin from Italy, seemed unable to attract the necessary quorum to elect a new pope. So let's say, definitely calmer today, but the agenda of the new pope is already pretty tight, already filled with engagements. In a few moments, in a few minutes, he will celebrate a mass here in St. Peter's Square for the cardinals. All the cardinals will be a kind of off-limits event for all the other people. We will be able to watch it, on streaming, but it will be no physical presence of everybody else. But still, it would be interesting to see what he has to say the day after the election, and then on Sunday there will be the official, the ceremony, the mass here in St. Peter's Square, where we'll speak to everybody. And again, the attention will be on the first words, the first concept of the new pope, what he wants to signal, what his mission is going to be, what the main challenges he wants to take. So it will be pretty interesting.
What can we expect? He's seen as something of a moderate, and there's a question mark about the relationship with the Trump administration on topics like immigration. What can we expect from Pope Leo XIV then, Flavia?
Well, let's say that we expect some kind of diplomatic approach. Yes, there have been, as you say, some issues, but he has a very strong diplomatic skill. He's an expert in theological studies. From this point of view, it could be seen as very similar to the late Pope Benedict, and also, but also very expert in anything, in geopolitical matters. So we can expect a very wise and diplomatic approach, at least at the very beginning. Of course, we are navigating very difficult times. The church is still pretty divided, geopolitical tensions still high, and I think it's very interesting that one of the first words he pronounced yesterday from the balcony was peace. He wants to that will be the key word probably, and also bridge builder. He wants to be a bridge builder and pontiff. If you think about it, the word pontiff, the original meaning of the word is bridge maker, bridge builder. So the idea is to reach everybody, try to find a consensus, the larger consensus possible, to bring peace in this world.
Flavia Rotondi at the Vatican. Thank you very much indeed as we look ahead to the first Mass of the new Pope, of course. Now, back to the central banking world. A big switch in focus here because Iceland's central bank is warning of turbulence for small countries from President Trump's tariffs. Its governor says that although the fallout is still unclear, it's concerned about the impact on critical industries such as pharmaceuticals. He's been speaking to Bloomberg's Francine Lacqua at the Reykjavik Economic Conference.
We don't know what the impact is. I mean, what is different is that we've seen not capital outflow, for example. Usually when there is a turbulence, small monetary systems, lose money, but we have seen inflows. So we don't really know what will happen. I see we are, as you see, the country is just between the Europe and the US. So we export both east and west. So of course we think a lot about the cross rate between the euro and the dollar. But but at the same time, our fishing companies they are selling in almost all continents. So we have been able to shift between markets. But as I said, small nations always worry about turbulence to international trade.
Yeah, and Governor, I know Iceland, a third of your exports are actually aluminium.
Yes.
Right.
Yes.
And so, again, do you worry about tariffs on that? Have you heard any concerns? You also have big producers here.
Yes, we have a large. Iceland is one of the largest producers in the world of aluminum, but most of our or all of our aluminum, goes to Europe. So we, as of yet, we are not that actually worried because we have the same access. Our main export to the US is fish, and there I think we have Iceland is big in fish. We have some pricing power there, and also actually no pharmaceuticals. So our main worry would be if there would be a tariff on actually pharmaceuticals to the US. Which is not, but we can manage a 10% tariff, and Iceland is also. We are not a part of the EU. We are not in a custom union, so we will not take part in any tariff war of any kind. So, and as you see, the country is just between Europe and actually America.
Governor, talk to me a little bit about the consequences of what's happening on the dollar as a reserve currency. This is something that would impact, many central banks. Is it something that you're thinking about, or is it something that that is a little bit too soon to try and assess?
We have, we had our, financial crisis in 2008, and since that time, we have been focusing on the resilience of our economy, and we have very large foreign reserves.
OK, Iceland's central bank governor speaking to Francine Lacqua, of course, in the capital, Reykjavik. Coming up, Bill Gates criticises Elon Musk for pushing through steep funding cuts to US aid programs. We're going to hear from the founder of Microsoft. That is next. This is Bloomberg. Welcome back. Bill Gates has warned about the impact of the US aid funding cuts made by Elon Musk and the Department of Government Efficiency, or DOGE. The Gates Foundation plans to give away $200 billion over the next 20 years. Gates spoke with Bloomberg's Francine Lacqua.
Well, the foundation will be a strong voice in how impactful that generosity has been. The United States, starting with President Bush in the year 2000 supported HIV medicine so that people wouldn't die. And that's been a bipartisan thing. It's made a huge difference. The Congress, as it's doing the next budget, will decide whether the U.S. supports polio eradication or vaccines for the children in the poorest countries. It's less than 1% of the U.S. budget. And so I'm hoping that we can keep that money in place or only have modest reductions, not the gigantic cut that some people are proposing.
You had some pretty strong words for Elon Musk, saying he's involved in the deaths of the world's poorest children. Do you think this withdrawal of government support is permanent?
Well, there's no doubt that the USAID payment cutoffs that Elon drove have resulted in dramatic increase in childhood death, and children that would have been protected from getting HIV from their mothers during birth, that money's been cut off. In fact, they attacked a grant that was actually in Gaza, Mozambique, for being up in Gaza in the Middle East. But in fact, it was HIV prevention money that was cut off. And so we need to look at how this money represents the moral leadership of the U.S. and the relationships we get. And it's not only to save lives, it's to stabilize these countries. It's to have health systems that will catch potential pandemics early and avoid them coming to the United States. So there's a lot of great reasons this less than 1% of the budget shouldn't be cut off.
Have you had any conversation with any Trump officials about this?
I've had 2 meetings with President Trump, and the main focus of those conversations were the great work the U.S. has done on HIV and how we can do even better with that, drive innovations, including a HIV cure. I talked about the need for the U.S. to stay in polio, that they're a critical partner. And so, I think when push comes to shove, this money should be maintained, although the final word on that will come from the Congress.
What has that dialogue looked like from the other side? And have you met with Elon Musk?
I haven't met with Elon about this. I mean, in terms of USAID, I'm out in Nigeria and Democratic Republic of Congo and meeting the amazing people who did that work for USAID and understanding the impact that it has. So, that's my hands-on focus is global health.
The Gates Foundation chair, of course, Bill Gates, speaking to Bloomberg's Francine Lacqua. Do not miss the new edition of the Bloomberg Weekend newsletter, by the way, where you can get deep analysis, feature pieces and profiles that provide unique insight into the latest news. There's plenty more coming up as we look at US futures pointing right now flat, in fact, S&P futures. Nasdaq 100 futures are up 0.1% after gains of a little over 1% yesterday. European stocks up 0.3% and a solid session for Germany. The DAX up 0.4%. Stay with us. Happy weekend. This is Bloomberg.